1%. You saw Caesars drop. You saw Disney drop. You saw Royal Caribbean still getting beaten up as well. These companies are signaling weakness in the consumer side. And at the same time that all of this is happening, all of the money is again concentrating back up into the top of the S&P 500 and the top 7 stocks, and then flooding into names like AMD, flooding back into names like LCRX, which is Lam Research. That had another strong day yesterday, adding in about 3.5%. So you're seeing this separation, right? A lot of money crowding into the tech side, and a lot of money up at the top of the S&P 500. At the same time that on the Russell side, technology stocks are selling. It had a horrible day yesterday for this company. TSAT, Telesat, dropped 13%. So this is kind of where we are. There's a big split between where capital is being allocated, and this is that wall of worry concerns that we have, where stocks really continue to be concentrated in these leaders, in NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, and Alphabet. Yet the smaller cap stocks and the smaller names and the consumer cyclical stocks are just not showing up. They're just getting beaten up. People are rotating out of them. And you're seeing, even consumer staple stocks has seen a little bit of a defensive rotation in the last couple of days, which is actually pretty interesting and a little concerning as we move toward that September period. So we are in a positive momentum environment, which is important, but at the same time, it is critical to note that that concentration of capital at that upper level is problematic, and we will continue to watch and see where that selling continues in the S&P 500 and if it trickles up into that Magnificent Seven group. And if it does, that's where you can start to see very aggressive levels of unwinding and deleveraging. And that's what leads to events like we have seen in the last couple of years, like the Silicon Valley banking event, like what happened with the Nikkei crash last summer, what happened with our drawdown on money markets last April, and of course the trade acceleration downturn that happened in April as well. On top of this, just pay very close attention to, let's see, I had a couple of names for you. Yeah. Couple of names for you to start this day. All right, cool. Got it. So stocks that have been strong, that we've seen strength in recent days, FTK moving higher. This is Flowtech Industry, stronger momentum pushing up against that 20-day moving average. Oil and gas, again, it's a very difficult and very choppy market for the oil and gas space, but short duration move here, looking for opportunities to the upside. You see strength in the RSI, MFI, MACD, and ADX. Price momentum, price and volume, trend. Okay, we went through this. We did a whole baseball analysis of this yesterday or 2 days ago. So looking at Flowtech as a potential move higher, keeping the trade right here, right back at that 1250 level is a clean place to aim to protect the stock. On top of that, we have SoFi. SoFi's seen some strength recently as well. Very important to keep an eye on this one as well. Just beautiful, strong, smooth momentum coming out of the backside of that April downturn. The stock has effectively doubled. And we just want to continue to ride the momentum on that 20-day moving average level. In addition, METC, this keeps popping up as well. This is Ramaco, so we're back in the basic materials and the coal stocks. Coal stocks still looking pretty good. And again, positive move here on this ADX. Just keeping a very tight stop if you're going to try to ride this. The material space, remember, remains under some pressure, and it really will come down to the strength of the U.S. dollar in the coming months. FANG is Diamondback. That's energy, upstream oil and gas production with oil prices up this morning. I will note that obviously there is a little bit of strength, but if oil prices continue to weaken into September, and I'm actually starting to believe that they will ahead of the OPEC announcement and the expansion, Diamondback to the downside somewhere around that 130 level. RF, SanDisk, and WWD, SNDK back in play. This is going to be one of those names, obviously in focus with what's going on with the chips, but just again, staying under these key levels and looking for different ways to trade so long as the stock remains under its 20 and its 50-day moving averages. Today's watch list, Gap. And interesting that this comes up the way it has, but just trying to see if we can get back above this 20 and just push back toward that 200-day moving average. Relatively simple and clean trade kind of setting up, looking at some improvement in some of these momentum indicators, looking for a spread between 20 and 22, maybe one simple way to do it. And if it can't hold above that 20-day moving average, just let the trade go. On top of that, looking at BVN as well. BVN, that is one of those material names, just strength on the mining side, continued smooth momentum, moving higher, a little bit of chops along the way, but just looking for opportunities if this retests its 20-day moving average. I'll leave this up for you for a second. Find my water, write it down, get a pen. Okay. I will answer questions in a moment. I want you to pay very close attention to RYAM. This is one of those names that has been desperate for a rebound for the better part of 6 months. So RYAM bouncing off that low that just transpired last week, pushed here, 337, back above the 20 and the 50-day moving average. So I don't need to own options on this. I don't need to. But if you can find a cheap option on this heading into next week, where are we? Kind of emphasis on Lotto. It's not a whole lot there, but just buy the stock. The stop is right here at 411. Okay. Stock's at 440 right now. 411, 440. Looking for a move back to 5. Quick, easy, next couple of days. Small cap stock, specialty chemicals, pretty simplistic. That's the small cap side. The rest of the momentum in this market is in the exact same places that it has been for the last week and a half. It's in Palantir, and this has just been pure madness to the upside, an absolute burn higher. Apple on the back of last week, Apple breaking above these key moving averages, very strong. I think there's a very good opportunity just to do a spread on Apple going out into the end of the month and just trying to maintain this momentum into next week. DoorDash has just been another name, just continued strength, continued momentum, looking for that to continue to run. What else is there? Parker, PH, coming off that 20. As you look out into next week, again, the expectation is it always kind of builds ahead of these sell-offs. You start to see significant hurting, significant concentration in these big names. Palantir is on its way. Nobody cares about the valuation. All that they care about is the price strength. It's going to need additional ETF support. This might not make any sense to anybody. It's not supposed to. It's trading at 126 times sales. That is 126 years of revenue. That is how aggressively the market anticipates that this will run and how quickly it will grow. It's going to be pricing itself in at some point as a $1 trillion business. And the question is, well, how do you trade it? What do you do? Well, you wait until we push back to some of these 20-day moving averages. You can look at spreads down here, or you just have to be patient and wait for the next financial event to transpire, downturn in the financial markets, because that's going to be your opportunity to step back in on the stock if there is a bigger downturn. All right. Any questions? There's no such thing as a cheap option. You think the market is efficient? There's no such thing as that. So what you're looking for when I say the word cheap option, it's important. We were talking about this yesterday, the concept of the implied volatility rank. And the thing about the implied volatility rank is understanding where the price of that option is comparative to where it has traded over a duration period, whether it's 30 weeks or 52 weeks, which is the preferred method. Thought about buying APU this morning. It's not a bad idea for a day trade. But once again, as I've said time and time again, if you're doing this, if you're trying to trade AAPU, remember that is a leveraged product. It is a good product if you are trading things like volume weighted average price, right? So yesterday, if you pay very close attention to what this did yesterday, this is 1 minute volume weighted average price. And here is AAPU, and at one point came down, pushed off the bottom standard deviation band at 24.15, finished the day at 25.15. That's pretty good for a day trade. Now, if you're owning one, you're only making $1, obviously, maybe not. But you got some weight, and you're trading around deviation lines and using Bollinger Bands and looking for these reversal moves, there is opportunity. And there are options on both of them. Okay. It's okay to get called on Palantir if you sold at a much lower level. Okay, so as we head into the last 10 minutes, we like to go through a number of different screeners. Remember that we always talk a lot about looking for names that are breaking out and looking for names that are breaking down. And when we are looking for the names that are breaking out, we have seen these names again at the top of the list for the last couple of days. Keurig, Dollar General, some defensive names. Skyline is there. And just to give you a little bit of a sense and understanding of what we're trying to accomplish here, we're focusing on relative strength index. We're focusing on the MFI, the MACD, and the DMI. And obviously these are names that are aligned with those key moving averages that we have discussed. Now, with that, with the defensive focus, Dollar General and Keurig have pushed above those key moving average, KDP, right? Keurig. All we're looking for, and now that yesterday when it first popped up on the screen, is to trade and keep the stop back at these key moving averages. And now we just simply look for it to continue to burn higher. You don't need a lot of capital to utilize short-term options trades around these very specific lines. And all you're doing is keeping very tight stops and hoping that this is the time that Keurig breaks out, similar to what we saw in February or similar to what we saw in March. It has chopped around. You do know that you have these ranges, and you want to be very well aware that if this stock gets up to 34.05, it needs a little bit more juice. That would be your next line in the sand to play defense around. I know that's only 5 cents away, but at the end of the day, you just want to make sure that you have anchored and paid very close attention to where the stocks have reversed in previous periods. Dollar General, same thing. DG continues to showcase more and more strength. Very interesting and very bullish. And again, I continue to note you want to make sure that you're paying very close attention to these moving averages and where we see these positive switches on MACD or ADX, and then the follow through that we've seen with the RSI and the MFI. Short-term option trades is your world. So 2 weeks. I mean, you have Third Friday coming up next week, so you can do a higher probability trade into next week with just higher delta options. All right. All right. On the other side, remember, you're also looking at stocks that are breaking down. So it's the exact same thing. This time you're looking at moving lower from the RSI, MFI, MACD. And you have John Deere, and you have NTES, and PNC Bank continues to bleed off, and Halliburton. You're not looking at the names that are down 5 to 10%. You're looking at the names that are moving and just burning off slowly. PNC continuing to move lower, seeing that continued weakness in the regional banking space. DEC is on that list. ARE is on that list. And Lucid back down to 217. Ugh. The worst. Man, look at that. That's ugly. That is a very ugly situation. Can I review? Yeah. So how did I define all this? All right. So with the ADX is effectively complementing a lot of these other individual things, right? ADX is measuring trend strength, not direction. So it doesn't matter if the stock is going up or down. It's simply what matters when Wilder created this, the same guy who made the ATR and the RSI, by the way. It's telling us whether the market or its stock is trending and not just chopping sideways. It's not telling you if it's bullish or bearish. It's just telling you how strong the trend is. So anything that is 0 to 20 is very weak. It basically just means that we're very range bound, and that's better for effectively reversion trades if you're looking for that type of reversal. 20 to 25 is basically a transition zone where you are looking for a breakout to happen, or effectively a breakdown to happen. But pay very close attention. You can see as this climbs higher, obviously Lucid moving stronger. Above 25, the market's trending. So if it is above the 20-day EMA or other indicators are bullish, like the RSI or the MFI, bull call spreads, naked puts, I'm freaking naked puts, bull call spreads, bull single calls, and directional trades are the play. If the spread is below the EMA and the momentum is bearish, bear put spreads, calls, selling credit call spreads, one directional on the stock. The one thing that we talked about yesterday was that if the implied volatility rank is high and the ADX is above 20, it's an opportunity to go short premium with more like range bound strategies like strangles or iron condors. And if the IV rank is low, and which is again the measurement of the options of the implied volatility over the historical period, and the ADX is high, that's kind of more long premium trades like long calls and long puts and debit spreads and things along those lines. A high ADX without any directional bias, don't assume the direction. You need to use the RSI or the MACD to help you confirm which way the trade is heading. A low ADX with breakout trades. Breakouts often fail more often in low ADX situations. So if you're sitting here going, I think this stock's really going to break out, but the ADX is at like 10, you better be very, very cautious about that. Pay very close attention to the if you're on Thinkorswim and you only have this line, you're going to want to add what is called the DMI. Okay, use the DMI, and you're going to get these lines here, green and red. The green is the positive directional indicator. The negative red is the negative directional indicator. When this goes green, green above red, you know what it is. It means that it is a bullish trend. And when it goes the other way, you know that it's a bearish trend. The distance between them combined with the rising ADX confirms a strong trending condition. So if you want, pay very close attention. Look for these crossovers as they align with crossovers on MACD, as they align with MFI and RSI moves around that equilibrium level of 50. And then if this is extraordinarily strong and the RSI and the MFI are oversold or overbought and oversold, that's where you want to start selling calls and spread calls to the upside on existing positions and taking some gains and recognizing that this can turn around and fall from the sky very, very quickly. Okay, good. I was trying to hit a button that had a gold line for RoboCop, but I just completely botched it. So it is what it is. All right. So the script for the TOS for the chart setup, are you asking for the one around um, volume weighted average price? Or, I mean, if you're just building a screen, just build a screen using the indicators that we just laid out. All right. On top of that, it is 9:19, and we are going to be heading into a very busy trading day. So as I always say, Garrett, are you seeing tiny turkeys and yes. Don's going to be here in a couple of minutes. Oh man, it's Friday. I've been sitting right in front of this screen all week. So I got one more run to go. So again, if you're not in the room with us, I'll be here today at 12:30. We're going to be talking about selling premium, talking about different ways to trade in this environment. And again, the big focus remains the same. We have to stay out in front of any volatility come August and September. It is going to be a very busy next few weeks. So get in the member room with us. Click the link and make sure that you are just constantly staying informed. Do as much as you possibly can to stay away from CNBC and stay away from some of the other big networks that are not following price action, that are too busy chasing headlines. This is going to be a very critical next 6 weeks, and we will help you steer through it. I hope you have a great day. And I did not get a chance to say it, but I did want to note that I didn't get a chance to ever to show this. We didn't talk at all about baseball cards this week. This is my favorite baseball card. It's right there. It's not even a baseball card. This is the 1989 Bowman sweepstakes card. It is an art card that was created Nolan Ryan, and I have 3 of them, but I have one of them in a perfect 10. So take a look at that card. It's absolutely beautiful artwork, and it's a throwback to the old paintings that one of our members, Erica Northport's father, who used to draw the some of the cards that are sitting behind me, particularly that 1952 Mickey Mantle. I hope you guys have a great day. Talk to you soon. Don is coming up, and you're going to get some music. You don't have to hear this voice anymore. Take care.